Today, Bitcoin ticks higher as the crypto rebound continues. The CFTC approves the trading of crypto products on registered futures exchanges, and Richardson of Exodus discusses the crypto wallet's plans to acquire W3C, the parent company of crypto card and payments firms Baanx and Monavate. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Crypto markets are on the rise as of midday amid mounting signs that the labor market is softening. That has led to investors growing more confident in a December rate cut next week at the central bank's last meeting of the year. As of noon Eastern, Bitcoin ticked higher while continuing to trade at the $92,000 level for a second day in a row. Ether climbed more than 2.5% to $3,173, and Solana's Sol token rose nearly 1.5%. Okay, let's talk about the top stories. The CFTC approved trading for spot crypto products listed on registered futures exchanges. The agency's acting chair, Pham, made the announcement today, saying the CFTC is now using its authority to, quote, work smarter and faster to protect Americans who deserve safe U.S. markets rather than offshore exchanges. She also said the move implements recommendations from President Trump's working group on digital assets, which the president formed with an executive order just days after he took office. Also today, derivatives exchange firm Bitnomial announced that next week it would be the first leveraged retail spot crypto exchange under CFTC regulation. Next, market maker Citadel Securities is asking the SEC to take a cautious approach on DeFi. The company filed a letter with the regulator on Tuesday saying that while it welcomes tokenization, it's important not to override key investor protections when trading tokenized securities. The letter lays out recommendations like identifying intermediaries that would trade tokenized U.S. entities, including decentralized trading protocols, as well as refraining from granting broad exemptive relief from definitions of an exchange and broker-dealer for those looking to facilitate tokenized U.S. equities trading. We reached out to the SEC about the letter, and a spokesperson declined to comment. Last, Connecticut is targeting crypto platforms that allow sports wagering. Yesterday, the state's Department of Consumer Protection Gaming Division issued cease and desists to Robinhood and Crypto.com, as well as predictions market platform Kalshi. According to the department, none of those platforms have a license in Connecticut to offer wagering, and even if they did, they'd still violate other state laws, including offering wagers to people under 21 years old. We reached out to Robinhood about this development, and a spokesperson told us that the platform's events contracts are federally regulated by the CFTC. We also reached out to Kalshi as well as Crypto.com, but didn't hear back right away. Now, this comes as crypto companies are embracing prediction markets as they look to expand streams of revenue. Just yesterday, Fanatics betting and gaming CEO Matt King joined CNBC to discuss its launch of Fanatics Markets, a predictions market in partnership with Crypto.com. All right, back to crypto prices for our main story. I spoke with Richardson, the CEO of the digital asset wallet Exodus. He breaks down what's driving prices right now as Bitcoin continues to trade above the $90,000 level. I also asked him about the recent acquisition of W3C, the parent company of crypto card and payments firms Baanx and Monavate. I want to start off this conversation focusing on crypto markets because I know you're bullish on Bitcoin, and we have seen the cryptocurrency bounce from below the $90,000 level to above that threshold over the past couple of days. Recently, however, the price of Bitcoin fell around 30% from its all-time high above $126,000 reached just a couple of months ago. But historical data shows that this is really nothing new. In fact, in 2021 and 2017, there were a few instances of drops this size or bigger. So is this something to be concerned about now?
Oh, not at all. As you said, we've seen this happen before. And so this is going to happen in any standard bull run. And so I think that this is just the beginning. I've been asked a lot, JP, do you think that the 4-year cycle still holds true? And my answer to that right now is no, I don't think that it does. There's a lot of bullish factors going into 2026. Even if we look historically at early 2025, right? We had the creation of the strategic Bitcoin reserve. We had Bitcoin ETFs be created and put out on the market, right? A lot of bullish things into 2026. There's predictions that the Fed is going to continue to drop interest rates. And who knows, like when the United States starts buying Bitcoin, I think that these bullish trends are going to continue.
Well, you certainly took one of my questions out of my mouth regarding whether the 4-year cycle is dead. But, in previous cycles, Bitcoin's drawdowns of this size have been followed by rallies to new records. So what's your outlook for Bitcoin, especially as we head into the new year? Do you think Bitcoin has the potential to surpass its all-time high above $126,000 anytime in the near future? And if so, what would need to happen?
Absolutely. I think that at some point in time, we're going to see Bitcoin cross the market cap of gold. And so Bitcoin has a market cap today of roughly 1.8 trillion, and gold has a market cap of roughly 18 trillion. And so for Bitcoin to cross that market cap, I mean, that's roughly a 10x from here. So roughly $900,000 a coin. I think we're going to see $1 million a coin. Does that happen in the next few years? Maybe, maybe not. But I definitely think that within the next year, we will see Bitcoin cross $200,000. And I think that what's going to happen is again, the Fed is going to cut interest rates. Trump is talking about handing out these stimulus, these stimmies to all across America. So I think that's going to add a little bit of a bullish narrative to this as well. And then again, I think with the midterms coming up, you may see the United States want to start buying Bitcoin and put it in the strategic Bitcoin reserve. And we just had, I can't even believe this barely made news, right? We just had Texas, the 8th largest economy of the world, buy Bitcoin and put Bitcoin on its balance sheet. How many other states are going to follow? How many other countries are going to follow? So I think a lot of these bullish factors really drive us into a positive 2026.
And it certainly will be very interesting to see if your forecast comes to fruition, that $200,000 number. But, all eyes are on Capitol Hill for the next 2 weeks before Congress wraps up for the year. And as lawmakers take on crypto market structure legislation, many in the industry, I'm sure yourself included, had hoped we would see a market structure bill become law in the U.S. before the end of the year. But then we experienced the longest government shutdown in history. So what are you hoping to see from lawmakers as it relates to progress on market structure? And what would change for Exodus with a framework in place here in the U.S.?
Look, I think people in the industry have to be a little patient here, right? I mean, we got the Genius Act here in earlier 2025. So now stable coins can be legally issued in America. So that's great news for the industry and great news for America. So as it pertains to market structure, what we're seeing right now is a formation of the bill that we're actually quite happy with, in the sense of that it protects the right to self-custody. In other words, for people all across America that hold their crypto, that take custody of their crypto in a wallet like Exodus, this bill has provisions that make it very clear that this is okay and a right of all Americans. So that's one major provision that we're really happy about. Another one that we're really happy about and excited to see is the protection to open source developers. If you are a developer out there and you're building a blockchain or you're building any infrastructure for blockchains, as long as you can't move the customer's money, then you are not a money transmitter. And so this is a huge win for the open source ecosystem. So we're really excited to see these two things in place.
So last week, Exodus announced that it is acquiring W3C for $175 million. The deal would allow Exodus to offer payment cards through networks like MasterCard, Discover, and Visa. You were quoted as saying that the announcement marks a major step in the company's mission to make self-custody and crypto payments practical for everyday life. So take us through how this would all work and what are some of the other goals of this acquisition?
Yeah, absolutely. Like right now, a lot of people use crypto just to speculate on, right? You buy your Bitcoin, you want the number to go up, you want it to increase in value, and that's great, and I think that's fine. But at the end of the day, Exodus is closing the gap between people holding crypto and actually using it. That's the important piece here, is that we have customers out there that are holding stablecoins in their Exodus wallet. And so we're building the missing rails so they can spend them without giving up any control whatsoever. And so that's what's really important to consumers. It allows the consumer to have their stablecoins and actually go buy groceries, as opposed to sending their stablecoins off to an exchange and then having to transfer to the bank account. This just removes a lot of the complexity and makes it very simple for the everyday consumer.
And you also had another acquisition announcement during your earnings call in Q3 related to stablecoins. So what else can people expect from Exodus in the near future, specifically in the coming year?
Yeah, so right now, I mean, a lot of people think of Exodus as just a wallet, right, to hold their crypto. And so these acquisitions represent that we're not just a wallet to hold your crypto. Now we are a platform for moving money, for allowing everyday consumers to move their money, to spend their stablecoins. Now with the acquisition of Grateful, consumers and merchants and vendors in South America, especially Uruguay and Argentina, can use stablecoins at the point of sale to check out and to buy groceries. And so that's really important to us, is that crypto cannot just be for the geeky nerds amongst us. It's got to be for the everyday person all across the world.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.